G'day, mate. You guys ready to go? Let's get her done. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello. Hi, my name is Wayne McDonald. Nice to meet you. I'm the Chief FX Market Strategist for TradersWay.com. Whoa. Hey. Whoa. Hey. Ho. Hey, hang on. Look at that. Look at the zoom. Hang on. How do I, can I adjust this thing? Hang on. I'm a little zoomed in. Hey, it's not bad though. Guess that'll have to do, huh? It's really bright too. Hang on. How do I do that? Brightness. There's no automatic brightness control. Saturation. Huh. There's just tons of things it won't do automatically. Okay, well, we'll leave it for there. Oh, we'll have to look at that, John. For some reason, you didn't complete the whole process. So we'll have to figure that out. Volume should be fine. Microphone's in my face. Everything's turned up max. There's nothing more than I can do. But anyways, let me continue. Today we'll conduct technical analysis. Yay! We'll go through the dollar pairs, yen pairs, Swissy pairs. It's really a weird setup. Swissy pairs. And I'll try to cover what's on your mind. Nonetheless, get involved. If you're benefiting from these webinars, please visit TradersWay.com. Open a demo account. Download MT4. Play some trades. Check out the execution speed. It's fast. Check out the spreads. They're narrow. Check out the swaps. They're amazing. Okay? If you need more from me, besides these daily webinars, I wrote a book. You can go to Amazon.com, type in Strategic and Tactical Forex Trading. You can go to FXBootcamp.com for video training. You can go to swing.fxbootcamp for swing trading. You can go to live.fxbootcamp for live performance analysis and coaching. And of course, you can go to metatraders.com to get my chart templates. So there's plenty of resources out there to help you succeed. Anything else going on? Hi, Nancy. Whoa. All right, so let's see if this goes good. I threw this up here because we're at a moment of truth for those that are interested in continuing a bearish momentum move. Okay, so for those, what you want to look at, let's kind of zoom in here, is you got your first level of pullback. Oh, triangle tool disappeared. First level of pullback. That's all it is first level of pullback. But if you're looking to trade first level pullback, then there may be one over there. What's up, Brooke? All right, here's drawing tool. Okay, cool. So it's just, I'm sort of pointing out the obvious, but I want to make sure you see these things. So, for example, one of the things I'm looking at is this. Okay. The second thing I'm looking at is this. These are weekly bearish sell zones. So I'm not telling you have to be a bear or should be a bear or nothing like that. What I'm suggesting is if you were a bear and you're still a bear, then you are looking for something like this. Okay? Capiche? Which means it'd be a terrible place to buy now. You're way, 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 way too late. So the way I look at it is, well, I'm trying to refine bearish. Now, is there a reason I can be bearish here? Well, with the coronavirus stuff still going on, I see there's potential. Okay? So let's take a look at a different pair. This is Euro Yen, right? The next sell zone is 21. Oh, look, we're at 21. So we're at next week's sell zone. And maybe, just maybe, there's something there. I don't know. If you wanted to play it as a trend, you could pretend like that kind of stuff. I don't think I would use it. It's not trending that much, but it might be. So this is sort of a last stand. Notice none of this has to do with this week, and it has everything to do next week. So, right, you have permission to consider a trade here, okay? Or wait for on a smaller time frame, you know, like this. Okay, whatever you want. Pound yen, okay, less of a move down, as you can see. So it's more of a support than the other ones. So that means it could be sort of a red flag for all the other ones. So the way I look at it is right now you got it trapped at a bottom. Cool. And then where's the next top? Well, somewhere in here. And you can see it's not really an amazing place to sell, right? And you notice how the other sell zones, like this week's sell zone on some of these were, let me just draw it up here. Like this week's sell zone was here, and then next week's sell zone's here, and we're already through this week and already on top of next week. Pound yen has not done that. Okay, pound yen has not done that. Okay, Kiwi. Okay, a lot more exposure to Asia. You see the difference. Okay. So this one we have sort of a double top on a double top. Lower low. Could you plausibly sell the lower high? Yeah. Right? Could that be your plan? So let's take a closer look at this and examine any potential opportunities. I wanted to keep that thing over there. It's not going to let me. So let me go to a 30-minute. I think you would have to include this, right? So there's the roll reversal. There's next week. So I'm already talking Monday, even though, what day is it, Wednesday? I'm already talking Monday, okay? So if you were a bear, I think, again, we don't know if it's going to do this, but I think it's reasonable to plan on a move like this. Okay, so remember, when you're planning, you have your bias, then you look at market conditions, and then you find your price to consider, but right, and then you use technical analysis to decide if you're in or not. Okay, so can you be a bear here based on trend? Well, we already established this shoulder here is the right shoulder of a giant double top followed by a lower low. So your giant plan here, right, this move is simply this move. Okay. Chuck says you already bought it a few minutes ago. You bought it. You can't, or you shouldn't buy it here, in my opinion. Okay. Yeah, of course, Joe, right? I mean, we're in a full employment, right? So you must be talking about something else then. All right, cool. Oh, I see. Okay. Yeah. Yeah, I wasn't talking that. So anyways, 291, great. I mean, we already know that's the economy in the United States, right? That shouldn't be any news. Okay. But if you want to jump in on stuff like that, we can jump into dollar. Which one would we trade on here? None of these I don't stink. Why don't we go to euro dollar? Okay. Okay. 5-minute chart. Okay. Are you a bull or a bear? So let's go through the week so far, okay? If you are a day trading bear, this is a sell, this is a sell, and this is a sell. So like ADP is here, but theoretically you could have taken profit here and been done in London. No, Javier, again, everything we already know. We already know everything. You guys have to always ask, like, get away from the media part of it. What is it that we know? Okay? And so there's no new information. Hey, the economy is great. Yeah, really? The stock market's at all-time high. Yep, know that. What we're interested in is where will there be a change in the White House? That we don't know. And that's what really matters. Okay? Okay. Baby G, think of this before. Think of this as money flowing back to the United States. Likely it's a coronavirus issue. Okay? Risk off. Okay? Okay? Cool. But you can see, right? Here's your sell zone. Here's your sell zone. Here's your sell zone. It's not terribly complicated, but again, if you're doing intraday trading, you're getting caught in this noise here, this challenging area, right? So you can see if you averaged out the price on the Euro USD over the last, I don't know, 4 hours, on average, nothing's changed, but there's been lots of volatility. It's been like this. So it's easy to lose money in that tiny time frame versus just selling here and you're done. Selling in here and you're done. Or selling in here and you were done. Okay? And look at the beginning of the day. Oops. Okay, look at the beginning of the day. Sell, 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 right? Wake up, you're in New York, take profit. Wake up, you're in New York, take profit. Wake up, you're in New York, take profit. Okay? There's easier ways of doing it than scalping. Although, like I said, I love scalping. I don't have a problem with scalping. But you should set up your trades right. All right? Just looking at all the wonderful day trades. This one's trickier. That's easy. That's easy. That's easy. That's easy, but lost. That's easy and broke even. That's tricky. That's easy, that's easy, that's easy, right? So like, for example, let's just take the bearish point of view. That was likely a sell zone. That's not a sell zone. This is, but didn't work out. Okay. This is, probably broke even too. This is, and it worked. This is not, you're out of position. This is, this is, this is, this is, but you probably lost money. This is, you probably broke even. This is, you probably made money. This is, you probably made money. This is, you probably made money. So, you know, you got lots of no trades, some mediocre trades, but generally when you're day trading, there's tons of opportunity. Okay. Yeah, Javier says surely the Iowa thing. Yeah, well, all that did was help Trump. That's all. It just it looks like incompetency to the public, or at least to the media, and that's all that really matters. Okay. So what again, I want to make sure I'm not misunderstood. Intraday trading and scalping are necessary skills to have. I just wouldn't start there. Because if you don't know how to do the bigger trades, if you don't know how to set things up technically and fundamentally, then your intraday trading, aka scalping, is much more of a random walk. Not necessarily, but I would find it difficult to argue to say that you shouldn't know technical and fundamental analysis on a higher time frame. You're like, oh, you shouldn't know that. That would definitely be bad. You're like, wow, really? So, anyways. Okay, taking a look at this. I think we talked about this yesterday. Okay, but this is the first level to resell if you're a bear. Do, 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 do. So let it go. Let it fade away. Let it go. Okay. A breach above that, I'll probably take a walk out of the market. Just take it all and walk. Baby G says, yeah, any major event and surprise, really, can mess up your whole trading day. But like I showed you on the euro dollar trade, you could have spent like 3 minutes today entering that trade. You know when to do it. You know why to do it. You know how to do it. It doesn't take much time, but you actually know when to actually be at your chart and do it. And you're like, oh, look at that, I'm a bear. And we're on the daily central. Yeah, I think I'll take a shot, put my stop, and like literally you're done in 3 minutes for the entire day. You come back in New York, you're like, wow, I hit my profit target. Right? What about ADP? What about ISM? Yeah, what about it? The money's already in the bank. You already made your money, right? But you got to get comfortable with the idea of always losing a little and always trying to gain more. Okay, that's it. All right. Oh, boop. Both, baby G. Now, a day trade, you hit your target and you're out. So, do I exit my day trades at the same time? No. When they hit their targets, they're taken out. Simple enough. But can I scalp into a spot and spot into a swing and swing into a carry? Yeah, that's actually how that's it. That's how you do it. There's no difference between entering a trade that you expect to be in for 4 weeks or a trade you expect to be in for 4 hours. There's no difference on the entry. Okay, so that's why I'm teaching the swing traders how to day trade, because really they need some refinement on their entries. So I'm going to teach them how to do it. Yeah, generally, baby G. I generally move my stop break even and then move on. Like once I make a trade, all I care about the risk, and then I move the stop, and I'm on to the next trade. So if I don't hit the target, do I stay in it? Yeah, I can't lose any money. So uh, yeah, it doesn't. It almost doesn't even exist to me anymore, baby. I'm on 5 other trades since I've made that one, right? So you're like, gravity will take care of it for me, right? All right, let's go. All right, so I believe it was on Monday, or maybe even Thursday or Friday of last week, but we talked about this idea of oops, I guess black, white on white is going to be difficult. All right. So we talked about this, clearly a support, right? And then price action, up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 up. Down, down. It took almost 3 days. Buy. Look, you're making money. I know, right? Okay. So once again, it's one of these things like if you're getting lost in the noise of 15-minute charts and 5-minute charts, if you're getting lost in that and getting, you feel like you're dying from 1,000 lashes, we need to fix the other stuff first. We'll get you to be an amazing scalper and day trader, but you got to know this first. Like if you're not catching these things, you're missing the whole idea of trading, right? Biased pivots. Count periods. 44. Okay. How would you treat this if you were a bull and only a bull? When we open, we're down here low. Is this a good place to buy? No. You might buy this. You wouldn't buy that. Oops. Let's do this differently. Let's say, let's do this in pink. Okay, you would not buy this. You might try this, fail. You wouldn't buy this. You wouldn't buy this. You might buy this. You wouldn't buy this. You would buy this. You would have tried here. Would have tried here. Little day trades. Mediocre, but your losses, there's more walkaways and there's a few losses, but the losses are small relative to the bigger winners, right? But then you change it up. Let's do this. Oops, come on, drawing tool. Let's do this. Let's change it up and say template, bullish, weekly bias. Now I got to go to indicators, go back to here, bias pivots. Okay. Look at some of these buy zones. No, anyways, consistency, right? I like the full Monty, of course. I like to know everything. Okay. So ultimately, everything becomes very fluid. Right? That's how you should be. Fluid. Okay? And of course, if this makes a higher high, then you would draw this. Okay. What do we call that? Okay. Well, it's price action. I call it stepping up as well. Okay. Roll reversals, yep. Resistance becomes support. Resistance becomes support. Here's resistance, so in the future it might become support. Okay. Okay. So some of you have been requesting other cryptos. Do you guys really trade these other cryptos? Yeah, XRP was up 10%, wasn't it? Every day, Peter. It's all the same thing to me. XRP, you guys like XRP? Erythium? Well, to me, I'm a little amazed like why you trade them. So I got to be careful. Because the general premise, of course, is going to be different than macroeconomics, I think. Like, why would someone trade XRP? I don't even know, right? But the technical analysis is easy. So the how you could do all day, every day, but the why is a little confusing to me, right? But isn't XRP only like 20 cents or something, 25 cents? Do people trade it just because it's cheap? But whatever. So, by definition, you can't buy it here. Okay? Are these pivots working amazingly well? No. So, okay, it's different. That's all. It's different. XRP, look, 27 cents. Whoa! Wow. It was up like 2 cents yesterday. So anyways, let's add a chart to it. And it's not bad technically. It's not bad. We'll see how it behaves in here before I start drinking the Kool-Aid. But okay, this is an OOP unless you took it the week before, which is a front run. Okay, that's fine. So a front run here should be telling you to exit now. Okay, so if you were front running it a week ago at 21 cents, you know, we're now at 27 and a half, and you should be putting that profit in your pocket. I don't know if that's what people are doing though. That's the problem. So let's try to figure this out a little bit. Let me close that. Let's try to figure this out a little bit more. Oops. Let's do indicator list. Let's do, I don't really care about weekly. Let's do monthly. Check it out over the last year. Let's see. Well, some of these are pretty good actually. So what do we know, right? We always have to ask ourselves, what do we know? Well, a front run here says exit. Okay, this is an M3 to, M2 to M4. That was perfect. This is sort of an inside week. This is an M or month. M3 to the pivot area. So far we got two. This is an S1, not even an S1 R1. So this is sort of okay, and that's sort of, eh. So it sort of works fine. By work, I mean it's following rules. You got to be careful though. This might be confirmation bias, but let's say this is M2, which is a buy zone, and you're targeting that, went higher. This is a buy zone, it did go higher. This was a buy zone and collapsed, but OOP. This is almost a sell, but it did respect that pivot pretty well. Inside week, R1, S1, so that's fine. That worked pretty well. This is a buy zone into a new sell zone, and this one worked pretty well. Out of position, great. Here's the M2 to M4, and it did respect that pivot. Front run to this pivot. So if this holds, XRP actually does pretty well. Okay, so XRP does pretty well. So like this is clearly a buy zone. This is clearly an exit. This is clearly an exit. Okay, this is clearly a sell zone and an exit. Okay, this is clearly a buy zone and an exit. And this was a front run, and we're clearly in an exit. So again, if this sort of fizzles out here for a week or two, I would tend to believe that these exits, for example, are being respected, which means traders are very likely to be buying them, which means they're trading them, which means they're using them. Okay. Okay. Pro Trader says all these cryptos are in downtrend. Well, I'd be careful with that. I think that's a harmful statement. So I would rather you say, you know, you're just hardcore open-minded to anything. Okay. When you say all are in a downtrend, all right, you might be talking about that or something, but I don't know if that's truly how you want to be treating that. Javier says ADP numbers. What are your thoughts? Well, we already know we're in a huge bull run in the jobs market, right? So nothing new there. And with the job numbers being big like that, there's very little for the reason for the Fed cut interest rates further. Okay. Okay, so no new information. Little volatility and stuff. Great, great. Peter says, Dixie, going bullish? Well, as long as we're at full employment, consumers are filthy stinking rich, and companies are filthy stinking rich, and money is free, there's very little reason for the stock market to go down. Okay? Now, there's seasonality, all of this stuff, and so knowing that there was going to be a retracement off some of these big names, that's straightforward. I mean, we prepped for that, I'd say at least 90 days ago. It's rebalancing. People have too much Apple because Apple doubled. Guess what? Apple's got to fall, at least for a little while. Okay. So anyway, let's get off XRP and let me put back Bitcoin. Oh, yeah, Bitcoin. Okay. Take a look at gold. We were stuck here yesterday, right? So again, nothing's changed for gold since yesterday. Okay, you see that? We're at support, so you can't sell it. But we're at support, so if you're a bull, you can consider buying it. Okay? So it just comes down to what your plan is. Okay. Now, this is an out of position trade. So we're expecting it to return back to the central. Oops. And then do something. Who knows what it'll do, but the interesting thing is when oil falls, inflation falls. And when inflation falls, central banks will want to cut interest rates. Okay. But I still think if you're a bull, you're a buyer around this 50 bucks. And if you're a buyer around 50 bucks, you're targeting 65 bucks. No, Fluke says oddly Fed Fund futures June cut, right? The thing is, you have to decide if you're investing in the here or right in the for now or for the future. So, if everything is equal, right? The Fed will not cut interest rates. What if they're not equal? Like the coronavirus gets worse and worse and worse and worse. And the global market tanks and the global supply chain. So, for example, U.S. car manufacturers suddenly can't get, parts, whatever. I was going to say a particular type of part, but any type of part. So suddenly, the U.S. economy starts to be affected by it. Or at least there's an increase in the fear of that happening. When is the next likely cut? Okay. Okay, June and October are the big live meetings. So that's why the 60% or the big move in the Fed funds futures market, because if the coronavirus is going to get worse over the next few weeks, then the global economy contracts, things like oil prices fall, inflation in the United States falls, and the Fed cuts interest rates. Okay? So that's what I keep saying, like, stop thinking about what happened today, what happened 2 hours ago. You need to be ahead of the market. Now, the interesting thing is that drop, or that, let's say, that increase in the likelihood of a Fed cut in June, that's not an opinion poll. That is money being negotiated right now, which means you should be negotiating in such a way. Okay? And when the Fed cuts interest rates, what happens to the US dollar? If the market starts to think about this now, remember, Fed funds futures market is smart money. So if the market is thinking about this, that the Fed is more and more and more likely, because of the coronavirus, to cut interest rates, and June is the next real live meeting, what happens to the US dollar? The US dollar gets strong. Okay? Okay? Japanese yen gets strong. Swiss franc gets strong. Oil goes down. The stock market goes down. Why? Future earnings will be challenged and threatened and so on and so forth. Simple macro. Right? So when somebody says to me today, why is the euro dollar? Well, there's your answer. Okay? The how to trade won't save you. You should always be focused more on the why to trade, not the how to trade. Because you can get perfectly good trades at the perfectly wrong times. Okay. So how about this? Is the Canadian dollar going to go up in the next 6 months or go down? So Benjamin says, if oil goes down, the CAD goes down too. Cool. But what if oil goes up? And by the way, several people have answered if this or if that. You should have an opinion. Where are we going to be in 2 months? At $40 a barrel or at $60 a barrel? There is no if, there's just your opinion. Okay? If you think it's going to go up, then you'll be buying Canadian dollar. If it's going to go down, you're going to be selling Canadian dollar. And 45 and 48 are not the right answers. You're being sort of intellectual. I'm asking for an emotional decision. So like going down to 48, that's not what I'm asking. Okay? It's going down or it's going up. And I'm picking very round numbers. Now I can say, yeah, it's going to go up to 66.38, but that's not what I'm saying. You have to be emotionally committed first. Then intellectually, you'll justify your wins and losses just fine. Okay? You have to decide up or down. That's as easy as that sounds, that's where most of you guys fail. Okay. CAD Swissy. This is a bullish move. Okay? And this is a bearish move. You're on one of them or you're not in it. So for blue, oil falls. For the pink, oil rises. That's it. Okay? Now, I set you up on the $50 thing quite a while ago, which means if you're a bull, like, what have you been doing the last 2 days? That's an inverse. Head and shoulders. Okay. Now the interesting thing is if you want to be, I don't know, a textbooker, you measure this, okay, you find that distance and you plot it here, and it puts you right up into the sell zone, which is here. which means it'll do up. Well, there you go, Javier. Javier's made a decision. So you buy in May and go away. It's not complicated. Sankesa says, how many pips should my stop loss be? Well, how far away is your target? When you create a trade plan and you say, I'm going to buy on this weekly M2, I'm going to target right here. So you're interested in buying at 72.27 and your target is 74.08. Okay. Should you have a 12 pip stop? How, right? What are your trades worth? So the easiest thing ever is you put it below the S1. Okay? So in that case, if I bought it here, and this is my weekly swing, standard operating procedure is to put it here. How many pips away is that? Well, that depends on what yesterday's last period marker was. So market. So it depends on what was happening in the market last week, and the week before, and the week before, and the week before, and that will dictate target entries, targets, and stops. Okay, but check this out. This is your sell zone. Okay, this is your sell zone. This is your sell zone. This is your sell zone. Okay? And unfortunately you can see market opens are important. Okay? They're occurring at the beginning of the week. Here we are in the midweek, and we're in the sell zone. But midweek versus the beginning of the week. So it's not quite the same. Okay, so what sets this up is bears made so much profit that many of them get out. So at the bare minimum, I would assume, if I was me, that we continue back to the mean. We call this a mean reversion. I don't think I spelled that right. Anyways, mean reversion. Okay. So I'm not even saying we're going up here. I'm saying we're back to the mean, which would put us to around the M4. Okay, back to the average. Do you use standard deviation like the MACD? No, like MACD, the moving average convergence divergence indicator is measuring moving averages. Okay? And what they're looking at, right, is are the moving averages pulling apart or are they contracting together? Okay? That's all they're measuring. So they're not the same. So would I use them the same? No, I look at what they're telling me and I interpret them, but I don't look at them as like, oh, it's the same. No, I mean, maybe there's a high correlation between them or something, but they're not the same. So no, I wouldn't think of them as the same. Okay. So for example, let's add here, insert indicator, moving average, 21. Great. Now, insert indicators, trend, moving average. This time, we'll make it blue and we'll make it 55. Cool. Okay. Now, insert indicator, custom, I think this is the right MACD, 21. Okay, so we want to measure the 21 and the 55 EMAs because those are the only EMAs on the chart. And this is 9. I prefer 8 because 8's a FEB number, but it doesn't really matter. Okay. So what this is telling us, this is our friend MACD, okay? This is telling us the 21 is moving toward the 55. No, you said, would I use them the same? No. But anyways, the 21 EMA is moving toward the 55, and at this point, the 21 crosses above the 55. Okay, and it goes above, and it's really, really bullish, really bullish. Now it's less bullish. The 21 is moving back toward the 55, but it's still bullish. Back toward the 55, back toward the 55. Okay, it's contracting, still bullish, but technically less and less bullish. Then we get a crossover in here, which means now the 21 and the 55 are essentially the same price. And then it drifts a little lower, so technically the market is bearish here. Why? The 21 is below the 55, and while it's pulling away, it's becoming more and more and more bearish. The 21 is farther and farther away from the 55. Here, the 21 is starting to drift back toward the 55, but is still below the 55. Still below the 55. Still below the 55. Okay? Now they're kissing. Now it's crossed. 21 is above the 55. Okay? Now it's the same. Now it's above. Now it's the same. Now the 21 is below the 55. Now the 21 is farther and farther away from the 55. Farther away. Oh, now they're contracting. They're converging. The 21 is coming back toward the 55. It's still below the 55. So on and so forth. That's all this indicator is telling us. Okay? See? Moving back to, right? Moving back toward the 55, crosses above the 55, drifting back toward, okay? In here, cross is the same as the 55, drifting back below, away from the 55. So see how it's pulling farther and farther and farther and farther and farther away. And then right in here, it starts moving back closer. Here it crosses above, drifting around, right? Kisses, there's the kiss. There's the drop below. 21's pulling away from the 55 and is below the 55. 21 is moving back toward the 55, but is still below the 55. Here's a kiss. Here they are equal. 21 pulls away from the 55. 21 drifts back. Right here's the cross above. La-da-da-da-da-da-da. Well, it doesn't matter, Michael. I appreciate the question because some people probably don't know anything about the MACD, yet they might actually use it. Do I use it the same? I guess I'm getting caught on the idea of the same. You know, there's average and a deviation from the average. That's all it means to me. So, so as a confirmation of pivots and price actions and level, I don't see how they're just, I mean, it's not, I look at it and say, based on what has happened in the past, when there's a deviation from the mean, from the average, this is where it tends to drift back to the average. So it can continue falling, but in our data set, that would be considered an outlier. That's all it means to me. So this is at an extreme level, which would entice bears to take profit. Cool, which is the first step to bulls buying. So I'll need a double bottom at a key level of support that a blind man can see. Oh, look, the monthly M2, well, that tells me this is going to go up here, but it's also a weekly M2, which tells me we're going to go there, which then says, okay, that makes a lot of sense because this other thing that we started with tells us it's about time we head back to the mean, revert back to the mean. So if I'm a bull, I'll say, okay, first step is revert back to the mean, and then I'll buy a dip up here, fulfilling this whole mission here. So it's just more data. Okay? Yeah, well, look, if you sold high and you got here, yeah, it would be oversold. However, there should be more to it than that. And then you see there's obviously bullish support there. So it's oversold at obvious support. So there's another OS, right? So it's way oversold at obvious support. Would you be wise on the long run to take your money and run here? Hell yeah. And if you were a bear, where would you re-enter? Well, this looks good somewhere up in there. If not there, then up in here. So now you got plan A and plan B to re-enter. Plan A looks like this. Plan B looks like this. And in fact, plan B goes even lower. Okay? But they don't substitute. They're individual things. So if you have three things tell you that it's time to take profit, then take profit. Yeah. I don't use indicator. Is that all right? What indicator? The standard deviation? I mean, look at this. Like, here's what I like the mean reversion for. Okay? You just draw it. There's no way you can draw this wrong. Okay? See, it does everything itself. There's no way. I'm just moving the mouse left and right. So everything's done automatically. So you could say, let's grab it here. Since this period of time, I simply measure left to right. See where I'm measuring between those two vertical lines? All I'm saying is this bullish or bearish? Do I want to be a bull or a bear is a whole different question. So like Pro Trader says, I don't use that indicator. Is that all right? Well, why wouldn't you? That's the issue. Like, just, it's a quick way to measure the direction of the trend. Like, that's obviously down. Does it mean you have to sell? No, it just means when you measure all these data points and you do the slope analysis, that tells you the slope, but it's also calculating the average standard deviation from the average standard deviation from the mean. So now you kind of get like an overbought, oversold area. Like, why would you not use that? Is it okay that you not use it? Sure, but I don't understand why you wouldn't. And you don't even have to leave it on the charts that long. It's just a quick measurement. You say, you could do something like this. Let's say you're a bull and you're like, gee whiz, I'd really like to buy it around that this M2, but it's been pretty hardcore bearish. But is this a place where bears would take profit? And you do a quick study. It took me 1 second to draw that. I'm like, oh my God, that's clearly one standard deviation from the mean. Okay. The last time that happened was here. And we reverted back to the mean. So if I wanted to buy at the monthly M2 anyways, I wanted to buy at the weekly M2 anyways, and I see that I'm at one standard deviation from the mean, it all gives me permission to consider a trade back up, at least to the mean, but maybe to the right. Okay. Now it also says this is unlikely under current market conditions. So you're actually thinking of something quite big, which is a change in trend. And this would be from global macro bearish, right? Because what this is telling you is oil prices are falling and money is being shifted to the Swiss bank accounts. So if money is being shifted to Swiss bank accounts, that means it's not being deployed or employed in projects. This is how money actually works, guys. Right? Money gets put to work to do something, build a factory, build an airplane, build a car, okay? Build a building. Money gets deployed. Remember, money is worthless. What money can do has value. Money itself is worthless, especially at zero interest rates. So, for some reason, this is telling us money is not being put into projects, but instead being pumped into the Swiss banking system. They're taking money out of projects. That's bad macro. Okay? That's risk off. Okay? So for you to get this to go up, you're going to have to say money has to leave Swiss bank accounts and get put into projects, like oil projects in Canada. So Michael wants his linear regressions and stuff automatically. So that's why I have that in my day trading charts, right? Wait, this one didn't draw. Must have a different one. Day trading, let's do day trading bullish. There we go. So that one draws it automatically, right? So this one's saying over this period of time, over the last 3 days, this has been more bullish than bearish, okay? Here's your role reversal kind of thing, right? And here's your next one. But you should already see that because we already have it drawn. So right now, we're already looking at, you should be buying around 73. Right? 73 is here. Okay? It said this all day. You should be buying around 73. All right? 73.12 is here. 73.02 is here. Okay? So you would simply be continuing this, right? Okay? And then on a higher time frame, we know most likely this gets us back to the central pivot before bears start selling it again. Okay? Am I missing good questions? Somebody said, RJ says, these are good questions. So which ones am I missing? Anyways. Okay. Do you see the other time frame it's measuring? Let's delete this. This template is also measuring what's happened just today. And then this one's measuring what's happened so far this week. Okay, cool, right? And then, now I got to do blue. It's measuring something up here as well. Neat, right? So we would have to change this to see if you would have survived the first one as a day trader. Okay, so we got to go back a few days. Okay, so I answered a question just a few minutes ago about the stop. So here's your buy zone if you're already a bull. Nothing on this chart tells you to be a bull. That's just a bull zone. So if you're a bull and you had it right at the beginning of your market, you would have put the stop here. Okay, then your next day, here's your buy zone again, right at the beginning of the market. So you would have bought there and put your stop here. Cool. Okay, would you have bought here? No, but you could buy here and your stop would be down here. But now you'd move this stop to here and you'd move this stop to here. So now you got 3 stops here. Okay, and now the interesting thing is you should be buying in here and taking this up, in which you would move your stop to about here, which means then you would have this one here, this one here, this one here, so on and so forth. Okay, so you'd have 1, 2, 3 stops at just below 73. And your first one you bought at 72.5. So you'd have, let's say, 50, 50, 0, and negative 25. Okay? And of course, soon as it kind of moves up, you can jam these really quickly and go to 100, 100, 25, and break even or whatever. Okay? And by the end of the week, you'd be up about 300 pips. Maybe more. On this one thing, doing one thing. Buying at buy zones. Okay? And hoping the market continues. That's all. Buying into the reversion. Yeah, these are dailies. So the reason I put them up is it's exactly the same as this. It's the same thing. Those are the same buy zones. And it's even telling you profit targets, right? Okay. Yeah, they're in the what do you call them? The expanded toolkit. I believe they're on the full toolkit, not the drip kit. So I haven't looked at them in about a week, but I uploaded a ton, and then I gave a few more things to the programmer to redo. Okay. All right, so you're on 3 of those trades. You're bearish on the Swiss franc, which means you should say it differently. Don't say you're bearish on the Swiss franc. It's a negative. Say that you're bullish on global macro. Okay. Ooh, interesting. Tornado siren just went on. Oh, I just pooped my pants. I guess it's time to go. Oh my God. Just sit in my chair too much. I don't know if you can hear it, but there quite literally is a tornado. A tornado siren. But, whatever. You gotta die sometime. Get the kids in the. No, I wouldn't come to my office, but I think our movie theater is probably the safest place. It's really, really, really solidly built, and then of course soundproofed. So we'd all go into the movie theater and sit in our lovely leather seats. I mean, thinking about it, actually, that'd be great. I can put all the seats in the back row lay flat because I'm assuming you're going to lose power, and then keep the ones in the front row just normal, so you could sit in the front ones during the day, and then have actually beds to sleep in the back. So, anyways, that's the way to do it. Anyways, yeah, Ron says they could be testing it, although it is rainy. So, I don't know. Yeah, I don't know. Maybe that's the giant sucking sound of my taxes. But anyways, so I'll see you guys tomorrow. Peace on earth. May the pips be with you. May your profits be above average. Thank you for all your commitment that you're putting into this. It's going to pay off. It really is.